Welcome back. Now, impairments are weighing on master drilling. As a result, at the Global Drilling Group's half-year mark, profit after tax have plunged over 75%. But on the upside, revenue managed to climb up 17.3% in dollar terms. It just did not, however, filter to that bottom line, with HEPS pulling back by 0.5% in rand terms and 3.2% in dollar terms. No interim dividend has been declared, but an appropriate dividend will be considered at year-end. Let's drill through the performance with company CFO André van Deventer. Thank you so much for your time, André, and good afternoon to you.
Thanks, Nola.
André, let's start off by taking stock of the top line. I think I was keen to focus on that 17.3% growth. It's, I think, quite a strong number, especially considering the macros globally.
Yeah, Nola, thank you so much. Yeah, look, it's normally a challenging period for us. The H1, the miners are starting off with their budgets, so sometimes the beginning of the year is not so certain with your order book, but I think we had a good start to the year. We're looking forward to the full year having some good performance. But I think what we saw the benefit of was additional equipment that we started manufacturing the last couple of years, bringing that onto the fleet and getting additional revenue from that. I think from the acquisition we did a couple of years back, A&R Engineering, that contributed very nicely to this half year's revenue numbers. They were up about 40% compared to a half year last year. And then, going into the different regions, I mean, our strategy has always been diversifying the business. Today, I think over 25 countries that we're operating, more than 200 pieces of equipment we're renting or operating within the world. So I think that all being diversified added to the additional revenue for us.
Let's talk about some of those geographic locations then, where you are seeing some of the most activity there. That is very encouraging, André, and maybe parts of the world where we're not seeing as much activity as we'd like.
Yeah, I think depending on the different stages of mining we're involved. Remember, we on the exploration, we do a small bit on the operational side and then on the capital side. So different areas, different focus, but where we've seen a lot of growth is in the Africa region. A lot of activity in the Eastern Africa, Western Africa, and even in South Africa, we actually have been busy, but more growth into Africa. I think for this reporting period, we saw a lot of activity in the Europe area, some nice projects that started there. And then, like normal, the South and North America, it's been consistent. Although, if we want to talk profitability, had a bit of an issue with profitability in those areas. But if we can talk about growth, it was more in the Africa area.
I want to speak also then about currency issues, because of course when you are a well-diversified business, watching that currency, and it has been a volatile time for both the rand and the dollar over the last few months.
Yeah, look, we trade with so many different currencies, so we set up as a business to benefit from weaker emerging currencies. So the last couple of years we had a very nice benefit from that, and you'll see that with our headline earnings numbers in dollar terms and rand terms. In rands, it's normally a much better picture than what it is in dollar terms. But, sitting here today with the rand under 17 rand 80 again, I won't say we're a bit nervous about the second half, but obviously it can have a negative effect on us as a business. But that's the way the business is set up. With all the different currencies, we do take some hedges on that to protect us. But, it's just make sure on your cost, where you cover your cost, that you use your currencies wisely.
Let's talk then about the issue around impairments, André, because I think, reading an article earlier, I think it said that it was a bit of a blindsiding. It came from the auditor's perspective. It means there must have been a difference between your assessment of this equipment versus the auditors. I'm keen just to get more color into that picture.
Yeah, look, impairment is always an interesting discussion, especially with a business with a lot of engineers involved. They say the equipment is still shiny, so how can we impair the piece of equipment? But, it's something that has been coming the last couple of years. It's new technology that we've developed. We've put the equipment on a couple of projects. Last project was at Mogalakwena, which ended last year sometime. We're busy refurbishing the equipment and getting it ready to put it into the market. But today we don't have a signed contract and can show positive cash flow benefits out of it. So we really don't have an option then to impair the equipment. So, that doesn't mean we're not going to use it. We're marketing it all the time, and hopefully in the next year we'll get a profitable contract and we can put it back on the balance sheet again. So it has been a big knock. I mean, $13 million for us as a business on profits is a big number. But also, if you think about the capital that we've spent the last 10, 12 years, it's been over $250 million. And if you think about this impairment and all the impairments so far, it's less than 7% of all the capital that we spent in the group. So I think being a tech company, it's not that bad, although a once-off, it's obviously not nice to take.
I do see that shareholders have received this well. So, it does look like it is a once-off hit there, and that's what, we are seeing there. I'm also keen to speak about the order book and the pipeline. Those look pretty good, Andre. I'm keen just to find out here, where we are seeing a definite business coming through and some that is still in the works.
Yeah, the order book looks fantastic, actually, and the pipeline. I think there's so much work available, and I think, and that was a snapshot, as at the end of June. After that, a lot of things have materialized after that as well. So we see a lot of movement on the copper side. In Chile, specifically where they're spending a lot of money on the copper side, we're seeing a big pipeline coming through from the Chile side, which boosted our order book. And then also up in Africa, a lot of activity there. And then some of the newer areas that we're involved with in Saudi Arabia, we started with a project. Furthermore, up in Africa, we got some additional order book. And then up in Canada, although the one project there is coming to an end, we're busy tendering there for a lot of work up in Canada. So it's actually all around. I can't say it's one area is looking bad. So overall, we're in a very good position.
Now, before I let you go, keen just to get your outlook and just considering where we are, I think, right now in the interest rate cycle and how currencies will respond to that. How are we expecting that to play into Master Drilling's performance?
Yeah, I think what we know today, having a strong order book, sufficient equipment to execute, we're positive about the full year performance. One thing you mentioned, the currencies is a bit of an unknown. And it can have a big impact. It can have some big swings, but we will control what we can control and execute on that. So, overall, we feel very positive about full year performance. We're looking forward to finishing well.
Brilliant. Thank you so much for taking us through the set of numbers this afternoon, Andre. That was André van Deventer of Master Drilling. He's CFO there.